the Gould Mine podcast.
You touched on it, and I want to dive further into this. When it comes to like credit unions and how they support small businesses, can you share some examples of like successful partnerships that you've seen between credit unions and small businesses and how they've like grown together?
Oh, absolutely. I think back to somebody, when I was I've been at the MBFS for about 13 years now. And back when I was at the credit union, height of the recession, an RV company, what was happening during the recession? Everybody was pulling back their financing. But, the world was horrible. People were losing their financing left and right. But when you looked at their underlying business, they were okay. They were managing, and they've been in business for decades. This particular RV company has been in business for decades, and we helped them out. And the world turned around in a year or two, and they managed through it. And we were able to prosper with them back into a normal cycle. We're not trying to, and there were thousands of situations like that. During the pandemic, we did 12,000 PPP loans where you could call us up and you weren't going into some black hole. We were calling people up and talking to them to make sure it got processed right away and help them out through the paperwork. So those are the types of community stories that people hear about. A large credit union, could be $1, $2, $3 billion, which is considered probably a nice sized community bank. And they're there not just for the dollars, but also for those entrepreneurs. We're very active into the SBA 7A program, where that is one of the great deal. We're also very active in the SBA 504 program, which is we find really good for a lot of hotel operators and people expanding their business.
Outside of SBA, right? Because I understand that like SBA is probably like a core product for like a lot of credit unions, but what other vehicles have you seen? Like, are you seeing? Is it mostly that, or what other products are there?
Yeah, in today's world, what we are seeing, if you don't have a reliable line of credit, you could be upside down quick in your business. So we're very active in the lines of credit, just because. I don't know if you've heard this, but, bacon and eggs and everything you do costs a little bit more. Yeah. So that working capital for your everyday small business is just getting chewed up.
Yeah.
And the cash cycles of not even what we consider small businesses, medium businesses are really getting hammered. So you really have to manage that cash, and we're very active in in today's higher rates. We're seeing people pull back for vehicles and equipment, but you have to be able to manage your cash, and that is one of the pieces that we're really proud of, is being able, if their numbers, your numbers when prime rate is 8% looks a lot different than prime rate being 3.5%. And we recognize that. We if you have a good client and a good business, you have to be there for people and helping them through. And in today's world, cash is king. And it's hopefully this turns around, but the inflationary environment has really impacted across small businesses across the board, just because so much more is going out, not only in salaries, but utilities and every cost that you can think of.
Are these lines of credit primarily against the business, or are you securing lines of credit perhaps against the real estate that the businesses own, like, or is it kind of like a combination of the two?
It's all of the above.
Yeah.
If somebody has just a stabilized piece of real estate and they want us to put a second mortgage on, that's fine. If it's working against the business assets and we have to monitor your asset base a little bit more, that's fine as well. But really the worst thing in the world as a lender that I can do is underfinance a business, because then you end up in a lot of debt and in a really lousy cash situation. So, and many times in the lending world, if you get skittish, you see people pull back. For the last 2 years, there was really a liquidity crunch. So as people needed this increase in financing, you would see lenders pull back when what people needed was additional funds.
Yeah, it's funny, right? Like when things get tough, it's human nature to want to pull back. But in those moments, a lot of times what gets you through is actually like strategically and smartly, right? Actually like doubling down, right? And so that's interesting that you say that, because what you're advocating for is using lines of credit in a smart way to essentially get through those hurdles. That makes a lot of sense to me. And so with the lines of credit specifically, are these issued by, like, kind of walk me through the line of credit, like the process by which the small business owners go about like applying for these? What are the I would say like it's not a loan, right? So like, what are the requirements that are necessary for them to do that?
Yeah. Line of credit is the best product out there for a small business, and it's always the worst product out there for a small business. Mm-hmm. Because when people, the trap that we see often is a line of credit should be a short-term financing solution. There should be a draw off of the line of credit, and that should then have cash associated with it coming back in a cycle.
Sure.
That you can then pay down that
receivable
loan. Accounts. Yeah. So for the lines of credit, we're really looking at your accounts receivable, your accounts payable. We're looking at your cash cycle. When does an expense come out? If, it's always in banking school 101, they'll talk about financing a ski slope. You have expenses in the summertime, and then you have the cycles that come back in the wintertime, and you can pay that cycle back down. And so we'll look at it in really the cycle of your cash and the cycle of your business. But I can't tell you how often owners, they need to buy something. They have a big purchase coming in, or something else happens in the business, and they draw that money off of, and it never gets paid down. Mm-hmm. Because really it's a long-term debt situation. And another good example of somebody starting up a business, it's really when you max it off of credit cards, or you kind of get those lines of credit for starting a business. Yeah. Well, you might have that initial expense of your business, but it really should be paid back over 5, 7, 10 years as your business matures and pays back. But so often people get jammed up with these short-term payments, and that's where their business feels distressed and fail, because they've matched up long-term financing needs on short-term debt. And that's one of the reasons why I like the SBA program. It gets some bad knocks, but for a business looking to expand, it's the best deal out there today.
Yeah, that's interesting. So coming back to real estate, I heard you on a couple of podcasts, Mark, talk about some innovative financing solutions. So can you discuss some of the creative strategies that credit unions are using today to kind of help real estate investors secure financing?
Yeah, sure. We see, every potential solution out there we're kind of open to. So we'll see a lot of people, pull out the second mortgages, blanket leads, using that success that you have in your portfolio as a way to leverage it for the future. That is by far and away the most common method that we'll see. The other piece of maybe particularly when you're starting out, you're in a very good financial position, and we'll pull out those home equity loans. We also are there's I try to tell people to avoid the hard money lenders, but there's some people out there that will do the renovations for you, constructions for you, renovating some properties at a little bit higher rate, and then we're terming that out upon completion to help minimize, so that we're all in a safe position going forward. And we also look, if in today's world, if you're a business and have you occupying that business, there is a ton of government programs out there to help you out. Particularly, like I said, that SBA 504 program, it's a little bit of paperwork, but it's giving you more money than you ever would be able to get through a lender at the lowest rates in America. So, yeah, and that's really where we'll try to be creative on that local and state level to get you the funds that you need. A good chunk of those the 504 loans is where people are doing 90% financing of projects at 20-year fixed rates that nobody else in America could touch.